Welcome to Think Bigger Voices, hosted by Jennie Treby and co-produced by Tony DiBenedetto. We're on a mission to break the cycle of poverty for kids in America by inspiring education, advocacy, and action in our communities. We'll tackle big subjects, talk to the experts, and promote the solutions making an impact. Join us if you believe that every kid deserves the opportunity to think bigger.
Welcome to Think Bigger Voices. I'm Jennie Treby, and today we're delving into the world of banking and finance. We know that there are 40% of American kids, families, and young adults who are struggling to make ends meet. And at the center of those challenges is often things like banking fees, loans, interest rates, and credit card debt. Today's guest is going to talk to us about his unique perspective as the CEO of a credit union. Thomas Feindt, welcome.
Hi, Jennie. Thanks for having me. Pleasure to be here.
Thanks for being here.
Absolutely.
I should have said that you're the CEO of Grow Federal Financial Credit Union, or GROW, right?
So it's really Grow Financial Federal Credit Union. It's a mouthful. Just go with Grow.
We're going to go with Grow. Well, welcome. Tell us a little bit about you and your role at Grow.
Yeah, happy to. So Grow was founded in 1955 at MacDill Air Force Base. So that means we're coming up on almost 70 years that we've been serving customers and our members, as we call, here in the Bay Area. You know, and it's really a tremendous organization. There are 600 team members that on a daily basis try to think about how do they make a difference in the financial lives of our members. So really, it's an awesome organization, and we are excited to become even more intentional in the low and moderate income Americans that are struggling in the Bay Area.
And we should reference all that we're talking about the Tampa Bay area, right?
Yes,
for our listeners.
correct.
Yeah, absolutely.
Not San Francisco, Tampa
Bay area, the East Coast Tampa Bay.
Honestly, we lend in 7 different states now.
We
were headquartered in Tampa Bay, but we've expanded to the lower southeast part of the country. We have store operations in Columbia and in Charleston, South Carolina. But again, we lend all across the southeast.
Okay, great. Well, before we kind of talk a little bit more about Grow and credit unions in general, tell us a little bit about yourself. How long have you been with Grow, and how long have you been in the credit union or the banking?
Yeah, so happy to. 14 years I've been at Grow Financial. My wife and I moved down here in 2011. But as far as my experience in credit unions, I've been in this industry now for more than 25 years and really kind of lucked into it. I didn't know I was going to work in finance coming out of college. I had to have an economics degree, but I had an opportunity. My first job out of college was a loan processor at a credit union. It happened to be North Carolina State Employees Credit Union, the second largest credit union in the country. And it was really there that I fell in love with the idea of being a not-for-profit financial institution. And that not-for-profit really is the main differentiator from a credit union than a community bank. I'm not going to come on here and say anything bad about community banks. They have their place and they are wonderful individuals. But because we don't have that for-profit motive, it really makes our revenue model cleaner. And when the money we make in the organization can go directly back to the people that bank at Grow, to the people that work at Grow, or trying to find ways to be more intentional as a good community partner.
That's great. So you mentioned earlier that a lot of your members are reflective of that 40% that we talked about. So how do you go about being a good community partner to these people?
Yeah, and truthfully, this is something that we really started focusing on after 2021. You know, there's a lot of turmoil that happened to our country over the last few years, and it gave us an opportunity to say, well, what can we do in this moment? When we think about so many people that are feeling left behind and the American dream is slipping away from them, as a not-for-profit financial institution, is there a moment right now that we might be able to help? And one of the things we recognized is, you know, there's a lot of federal aid available at times to individuals, but if you're not in the banking system, you go to the end of the line. Mm-hmm. So how could we get more people into the banking system faster? How could we make their account opening process easier? How could we lower their cost of banking, right? So when you think about the number of folks that go to payday lenders, you might wonder, why do they do that? Well, maybe it's because they don't feel like they have an opportunity dealing with a traditional bank or a credit union. And so over the last few years, we've really tried to work with other community partners here in the Tampa Bay area to see can we collaborate with them to try to help make a difference, to lower their cost of banking, to help them understand what do they need to do to buy their first car, to purchase their first house, to prepare themselves to pursue the American dream in a more meaningful way than maybe they have had previously.
So you talked about being a member of a credit union.
Right.
How do you go about finding and seeking out members?
Yeah, that's a great question. And it's really one of the things that makes it most difficult about being a credit union, because for some folks, there's an illusion they may not be eligible, right? And there are eligibility requirements to be a part of a credit union. My advice would be to your listeners, if you're interested in joining a credit union, go talk to them. They will work with you to see if you fit within that field of membership. Some credit unions have more broader eligibility guidelines than others. But it's always worth the conversation, because every credit union really has this basis of 5 to 10 people that will pool their money together because they felt like they didn't have an opportunity to be successful at that moment. So every credit union's origin story is about a group of individuals that felt like they just didn't have an opportunity to be successful.
So that could be, like in the case of Grow, maybe it was the Air Force with McDill, or maybe it's teachers.
7 folks from McDill absolutely pulled their money together, started the financial institution.
Got it, yeah.
Suncoast, very similar idea, where a number of educators felt like they would have a better chance to improve their financial outcomes by pooling their money together. Every credit union has that origin story. But again, it goes back to, because we're a not-for-profit financial institution, again, the revenue we make can directly go back into the pockets of the folks that bank there. So we can pay higher dividends, we can pay better loan rates, we can also take some chances on folks that maybe traditional banks wouldn't make loans for.
Well, and that's a great point, because I think a lot of people, there's a level of mistrust of financial institutions. So a couple of these things I wanted to dig a little bit deep on, and maybe it doesn't apply to a credit union, but I just wanted to see your take, as somebody in the industry. We talked about trust. So a lot of people are struggling maybe with the inability to get a checking account.
Right.
Or they have higher interest rates and banking fees, lower credit scores, hard time qualifying for a loan. What is your take on that? And what can people do globally to kind of overcome those challenges?
Well, I mean, again, when you think about how you lower your interest rate, a credit union by regulation is going to charge lower interest rates than a bank will. Just structurally, you're going to have a lower system there. And again, when you come in and talk with us, we're going to sit down and we're going to try to work out a plan to help you lower your costs as best we can. Sometimes it might be just a matter of making anywhere between 6 and 9 months payments on time to improve your credit score. We have lots of conversations with members about things that they can do to improve their credit score.
So, Thomas, what can a young person do who maybe has not ever had a banking account before, maybe they have no credit or a poor credit score, or they just need a financial foundation?
Yeah, step one is come in and talk to us. Right. I mean, that's one of the things that we can provide more so than anything else is financial literacy and financial education. Our job isn't to try to sell you something. What we are here to try to do is to improve your financial awareness and financial knowledge. In some cases, folks' credit situation may be better than they think, and we might be able to help them with a loan right away if that's what they need. In other cases, they may need some level of knowledge around how do you build up a savings account? How do you maintain regular payments on time? And so it may not be a loan right away, but maybe it's something that we work to collectively together. Again, this is what I go back to. The real beauty of being a not-for-profit financial institution is we don't try to push products on people that are in our best interests. We really try to be thoughtful and present opportunities and options for them to think about what's in their best interest.
In that vein, talk to us a little bit more about this concept of, buy now, pay later. And a lot of way the people get their items is they finance them. So talk about the potential pitfalls of that.
Yeah, and see, the struggle there is, inflation has hit all of us. Things are more expensive, and so sometimes people's their wants and needs don't always match up as well as they would like it to. So there's nothing wrong with the idea of buying now and paying for it later, as long as you develop a repayment strategy to extinguish that debt in a short amount of time. And oftentimes, that remembering that minimum payment, that might be in the financial institution's best interest, but it might not be in your best interest to pay it back at that longer amount of time that just continues to accrue interest and really doesn't do anything for the borrower. So this is where I got to go back to, I think, this idea of just understanding the basis of debt. And if you only do the minimum, how long you'll carry that balance.
Do you find that institutions like banks or credit unions or anybody who lets people finance, are they flexible when people come to them and say, hey, listen, I can't make a payment every 15th. Can I move that to the 1st?
Oh, it's always better to talk to the financial institution the moment you start to have trouble. Whether you're a bank or a credit union, the best thing you can do is reach out to your lender if you think you're going to have a hard time making that payment. Because certainly the lender is going to be much more likely to be accommodative early on than if they don't hear from you for 3 or 4 more months.
Because I think it might be more human nature that we think, oh gosh, I'm in trouble. I'll just sweep it out of the carpet. I'll deal with it later.
Probably the worst thing
and
you could do.
The best thing that they can do, or you can do as an individual, is just kind of come forward and say, hey, listen, I need help.
Yeah, absolutely.
Yeah. Right. Okay. How do banks and credit unions manage for the loss when people miss their payments and go into foreclosure and things like that?
Yeah, that just comes out of earnings, right? So when you think about a bank or a credit union brings in deposits and then makes loans, the difference between the rate they charge on the loan or the deposit, that's what they have for earnings. When people don't pay back loans, it has to come out of those earnings. So that becomes less money that financial institution has available to put back into the local economy or to give to their depositors or to pay their shareholders in the case of a for-profit institution.
Well, that absolutely makes sense. And to that point, then what can banks and credit unions do to partner maybe with other nonprofits or other organizations that aren't governmental that are trying to help people through and manage their debt and their finances?
One thing I've learned over the last couple of years are there are a lot of great organizations in our area that want to help. And so the question is, how do we connect with those better? Just recently I had a chance to go down to Feeding Tampa Bay and see their new facility and what they've developed. They're a really amazing organization, and one that we as Grow want to try to find ways to be more intentional and collaborate with. So in many cases, it's not just about what can Grow do, but how do we collaborate with other great not-for-profit organizations that have a similar mission of trying to make a difference in our communities.
Well, that's great. We love Feeding Tampa Bay. They're going to be a guest as well. We can't wait. Let's talk about the financial literacy piece, though. So you talked about, having a new location where you're helping to educate, the community there. But do you think it's more important for us to start talking to our kids earlier?
Yes, of course it is. I mean, whether we have it, even if that's an opportunity for us to come into the classroom and help. Florida recently created a regulation to bring financial literacy more prevalent in the high school environment. I think that's a great step forward. To your point, we just opened one of our first locations on a low-income housing project. We did that through a collaboration with the Housing Authority of Tampa Bay. And really the goal there isn't just about making loans and checking accounts. It's how do we help increase the financial knowledge? How do we really go after a banking desert that had developed right outside the core of downtown Tampa, where there just really weren't good financial opportunities. And we said, we might be able to help here. And so we launched our first location. It's a prototype store for us. Assuming it is as successful as we hope it to be, we will look to scale that into other locations here in the Bay Area and throughout the Southeast.
You just used a term I've never heard before called a banking desert. Like we've heard about food deserts, but Never thought
Same
about a banking
idea.
desert. Right.
It's the same idea where, for whatever reason, maybe different community banks or larger national banks have pulled out of a marketplace because maybe they think there's not an opportunity to have profitable relationships with the citizens that live there. Again, for us as a not-for-profit financial institution, profit isn't our bottom line.
We know that credit card debt is at an all-time high, especially for Gen Z, which is our young adults, right? And we recently read a stat that 20% of all adult Gen Zers have their credit card debt has been taken to third parties for collections. What's your thought on that?
Yeah, so that's a really difficult question to answer, especially when we think about our society is built on immediate gratification, right? I mean, Burger King, yeah, you can have it your way. Right. We, as consumers, are used to, if we want something, we can get it, but there's a cost to that. And so I think the real issue here, and again, I go back to this idea of financial literacy and education, understanding what happens when you make a late payment. What's the additional cost that you will have to pay now because you missed a payment and your interest rate on that credit card just went from 21% to 40%?
Thomas, I got to stop you right there. You said 30 to 40%?
Yeah, that's the term is a penalty APR. So you miss a payment and a bank has an opportunity to escalate your interest rate to almost close to 40%. Again, at a credit union, we'll never go above 18%. Even that number sounds high, but in comparison to 40, that's a much lower interest rate. I mean, that now you're starting to get close to where payday lenders, what they charge people to cash a check. I mean, those rates are even far higher than that. But yes, at a credit union, we can do a much better job of helping people save money for the everyday things that they spend on.
So are you saying that maybe a credit union is just a better option overall?
Yes, absolutely. I mean, I've always been in the credit union industry. I believe in our industry. I think our not-for-profit, purpose-driven financial institution leads us to be a better option for consumers in the United States.
Thomas, what's next for Grow?
Yeah, so one thing we're really excited about is our headquarters relocation. So we are leaving post-COVID, we have lots of team members now that work in 20 different states all across the country. What that's created is an opportunity for us to downsize our overall footprint in our headquarters footprint from 120,000 square feet down to about 50,000. That's created an opportunity for us to be a part of the rebirth in Ybor and the development of Gasworks as a project. We're going to be one of the first tenants to come out of the building down there. And what's important for us when we think about Ybor is we wanted to go somewhere very unique to Tampa, but we also wanted to be almost this idea of a rebirth. Again, I go back to our credit union makes things grow, people, money, communities, and dreams. And with our headquarters relocation, it gives us a chance to be a part of a rebirth in a community that's been around for more than 100 years, but has so much potential. We also see work is changing. So when we come to this new location, we're not designing it with cubicles. We're not designing it with more of the traditional things that you might see in a bank headquarters. We're really trying to design this location in a way that we can give them something that they don't have at home, and that's community. So people are the people that work at Grow are the most important resource that we have. The people that bank and Grow are the ones that we think about every day when we make decisions. And then now the people that we live next to, especially for those that may be more in a low income to moderate income, are the ones who are trying to be more intentional and drive value and help too.
Do you see this, this community and this rebirth and recommitment? Do you see that elsewhere outside of Tampa, is like nationally?
Well, when we think nationally, we certainly also are very focused on how do we take friction out of the overall process. So we are absolutely laser focused on improving our digital channel because we can't afford to have locations everywhere nationally. But as more and more people are becoming more confident and comfortable doing their banking on an app, we want to improve that service as well because we think there's ways for us to help even more people beyond just our brick and mortar approach.
Just with your viewpoint and working so closely with the community, what do you think are the biggest challenges facing kids in poverty or living even above poverty today?
Those that just feel like they don't have a chance to be successful, right? Hope is such a powerful motivator that if you don't have that, I don't know what's your inspiration to work hard if you don't have that sense of hope. So, I mean, for me, that's why I've loved being a part of this industry, is we do see the best in people and we do want to help them be successful. We aren't selfishly motivated by what's in our own best interest. There really is an opportunity to try to sit down and hear from you with what you think you need, and then you marry that up with our knowledge and expertise to help develop strategies that can really create better outcomes for you than maybe you thought on your own.
If you could dispel any kind of misconception that somebody has when they think about a kid or a family that's in poverty or living above poverty, what would that be?
Yeah, so I think maybe the best answer there is not everyone in poverty is lazy. Not everyone in poverty doesn't have a job or is unemployed or is looking to just get a government handout. When we think about the acronym ALICE, asset limited, income constrained, and employed, that's not somebody that's just trying to receive a government check and watch TV all day long. There are a number of folks that are working hard but for whatever reason having a hard time making ends meet. Sometimes the opportunity is just giving them some education and some tips and strategies and ways they can prioritize their payments. They can be made aware of that 40% interest rate that they're paying on a credit card. Our job at Grow is, even for folks that have accounts with us, do we have ideas and suggestions and ways that they might be able to make their money grow even faster, right? So again, it's a matter of trying to listen to the individual, hear what their needs are, and then offer suggestions and ideas that they have the opportunity to pursue.
That's great. Thomas Feindt, thank you so much for spending time with us. We really appreciate it.
Well, Jenny, this has been great. Thank you.
Thank you.
Thanks for spending your time with Think Bigger Voices. Visit thinkbigforkids.org/podcast to see more episodes, follow our journey, and stay connected.